In talking about auto loan interest rates, you guys, it's never very clear as to who is always going to have the lowest auto loan rate, whether it's the dealership, the bank, the local credit unions. And after watching this video, you're going to understand exactly why. In talking about interest rates, you guys, it's mainly credit unions that are partnering with dealerships to offer them the lowest rates that can be marked up, that you're going to get the very lowest rate from. That is your answer. That is the answer within just a few moments of having watched this video. However, stick around for the long version because it's going to explain exactly what I just said. What is happening, guys? Ari here from Boston Automotive Consulting. And in the description below, you're going to find resources such as supermoney.com, where you can shop around for auto loan rates, as well as shop around for a new car deal and get your auto credit scores. If you haven't already, please consider subscribing because this whole channel is going to teach you everything you're going to need to know so that you can negotiate your best possible deal. So what I'm talking about right now is the fact that the dealership typically works with like 10 banks / credit unions, as well as their own manufacturer's bank. The dealership is exactly that. It's a dealership of all sorts of things, whether not only just cars, it also deals auto loans, it also deals insurance products such as extended warranties and all that stuff. But let's dive deeper into what the dealership is selling exactly. So besides offering national banks auto loan products such as Bank of America, such as Chase, they're also offering local credit unions products as well. They may be approached by a local credit union and that credit union says, hey, listen, we can offer you 1 percentage point lower than our published rates that you can or don't have to mark up. So say for instance, that credit union has a published rate of 2.99 but is offering that dealership a 1.99 rate that they can mark up to say 2.99 to match their published rate. So all things being equal, the dealership is offering the same rate as the credit union on their website. Fair. However, if you had any insight or knew somebody that worked at the dealership, they'd be able to tell you, hey, listen, we actually can get this rate to you for 1.99. So keep that in the back of your mind for just 1 second. What I'm talking about right now is a rate markup from a credit union, and how that compares to other circumstances is the following. So say the bank that they have, say it's a Bank of America auto loan for 2.99. They've got that rate at 2.99, and they've also got a manufacturer's promotional APR at 0.99. Now the downside in taking the manufacturer's 0.99 is the fact that maybe you might be giving up a rebate. So typically how promotional APRs work is that you either get one or the other, and in some circumstances you get both. But if you're in a situation where they say, hey, we can offer you 0.9 but we can't offer you this price, chances are that you're missing out on a rebate because they're using that rebate or not using it in order to give you a very low interest rate. But you say to yourself, no, you know what, I'd rather try to shop around for an auto loan rate, take the rebate. That will lead you to the fact that that promotional APR no longer is on the table anymore, and you are left now with the dealership's 2 options or doing the research on your own. Follow me on this journey because we are about to do just that. A few months ago, my father was faced with the task of buying out his auto lease, and let's say his auto lease was a brand new car. We're not talking about auto lease buyout rates because all these different banks are wildly different. Let's talk about the most common, which is new and used auto loan rates from a dealer. Let's say I need a loan for $20,000 and I'm thinking in the back of my head, is the dealership going to give me the best rate, or is shopping around for my own loan going to give me the best rate? Let me answer that question right now before going any further. Shopping around for your own loan is going to give you the best rate. Why? Because all things being equal, say you got the same rate from both places, the dealership is still going to charge you a dealer documentation fee, and chances are the dealership is going to try and upsell you on other things that you weren't intending on purchasing. So if we weren't talking about additional extras and fees, you might be getting the same interest rate from doing the research on your own and completing the transaction on your own versus just getting it from the dealership quickly. Now, the dealership is likely to offer you products that you have direct access to, and in some circumstances you may not have direct access to, but could get access to. Does that make sense? As in, if you do a little bit of work, you could likely get access to those products. Let's talk about those products and what they are exactly. Let's talk about the national bank's offers and the local credit union's offers that the dealership typically will offer you. Now, starting off with Bank of America, you guys, I logged on to Bank of America to see exactly what my dad was seeing a couple months ago, and just looking at the new interest rates, it's saying 2.59% as being the new interest rate for up to 60 months. Now, if we were to just click on it, it's saying buying a new vehicle from a franchise dealership. So in essence, going to, a Honda dealership and buying it. Now, as low as assumes an excellent borrower credit history, as do all the offers. And chances are, if you've got, say, a 750 and 800 credit score, you could get that. So rates will fluctuate consistently. Now, credit unions will be likely to offer you or extend to you the loan with a lesser credit score, so keep that in mind. However, just all things being equal, you've got the same credit score at, say, a 750 everywhere you go. This information will stay consistent and will stay pretty much apples to apples with every bank's offer. Now, we've got a 2.59 interest rate for a new car loan. We go over and try to see what Chase has, and we go and we explore rates through Chase. We got a 2021, say it's a Honda in Massachusetts. We got an excellent credit history, and we got a $20,000 loan. A 60-month loan for $20,000 would be 3.29 in comparison to Bank of America's 2.59. And if we were to change that to, say, $30,000, it goes down to 3.14. So the amount of the Honda does indeed make a difference. If you were to adjust the amount that you're taking out, it does lower the interest rate a little bit. As you can see here through Chase, it also will make that difference, I'm assuming, on Bank of America. However, these are their published rates. Now we go over to, say, a company, a credit union like DCU, and they've got published rates at up to 65 months for 1.99%. I'm going to come back to DCU in a second. Now we go over to another local credit union, Hanscom Federal. This one is local in Massachusetts. 49 to 65 months is 2.94. So 2.94 versus Bank of America's 2.59 and Chase's 3.29. Another one, Direct Federal Credit Union, up to 63 months, 2.99. I think you're seeing a trend here. Metro Credit Union, up to 66 months, 3.69. Workers Credit Union, the information isn't even updated, 3.99. We've got Mass Bay Credit Union, 5-year loan, 60 months, 2.24. RTN Credit Union, this is another local one, 66 months, 2.25. So the idea is that, okay, say you're a member of one of these credit unions, or say you can become one. You're in a situation that my father was in not too long ago. So my father is not only a long-time Advantage customer, whatever the hell they call it, with Bank of America. So he qualified for that loan rate, and actually he qualified for a little bit of a discount because my father was a customer of Bank of America and a type of customer that also earned 0.25% deduction. He also wanted to explore what the dealership may offer. So he picked up the phone, contacted his finance rep at Toyota, the Toyota dealership that he got the car from originally, and he asked, hey guys, is it worth me financing my car through you guys? The finance guy told him, listen, I'm going to level with you here. I'm going to give you the lowest rate that I have, but you don't actually need to get it through me to get it. You can go directly to them. And they referred my father to DCU, which had that 1.99% interest rate, which, by the way, anybody can get. You can go to most of these credit unions, become a member, and get the interest rate offer that they've got, as long as you've got a credit score that would qualify for that rate. But in essence, what I'm talking about right now is the fact that the dealership told them you don't technically need to go to the dealership to get the loan done through us to get this rate. Now, some of those other banks, they may have seen 2.25, 2%, 2.5%. They may be allowing the dealership a little bit of markup so that they can make a little bit of profit off of their published rates. Now, in essence, what you want to do is if you've got some sort of aggressive interest rate already, say through Bank of America and such, and you approach the dealership in the sense that you're asking them not to just match the interest rate offer that you've got, but to beat it. In essence, what you're looking for is maybe a 0.5% to 1% off of the most aggressive rate that you've seen. That way, what you're doing is you're setting up the dealership for a chance to earn your business, getting some of the finance charge, getting some of the kickback for financing your loan, and in that sense, you'll be getting the lowest auto loan interest rate from the dealership. I know it's something that's not so easy to swallow, but believe it or not, sometimes the dealership may have the best interest rate, and sometimes it may not. What I want to do is encourage you to visit supermoney.com, shop around for auto loan interest rates, as they have a search engine that will allow you to see exactly what auto loan interest rates are out there. I also want to encourage you to visit the other links in the description below. Shop around the deal, see what dealerships are offering you, check out auto insurance quotes as well as your auto credit scores. And if you found this information useful, please consider subscribing. Smash the like button if you haven't already. Thank you so much for watching, guys. We'll see you next time.